Federal employees. The TSP C Fund is a solid, straightforward investment option that tracks the Standard & Poor's 500 index, also known as the S&P 500. This index represents 500 of the largest publicly traded companies in America, including household names like Apple, Microsoft, and Amazon. What makes the C Fund particularly valuable is that it follows the most widely recognizable benchmark for the US stock market. When the financial professionals are talking about how is the market doing, they're usually referring to the S&P 500. It represents about 85% of the total value of the US stock market. So the C Fund is an index, which means it does not try to beat the market. It simply matches it. Since 1988, the S&P 500 has delivered on average a return of over 10%. Although past performance, of course, is not a guarantee of future results, index funds like the C Fund offer several advantages: low fees, broad-based diversification across 500 companies. So you're not betting on individual stocks or trying to time the market. You're simply investing in American business as a whole. The C Fund works well when you're employed through contributing regularly, called dollar cost averaging. This is done through payroll deductions, which means you're buying more shares when prices are low and fewer when they're high. For federal employees building long-term wealth, C Fund provides a very reliable and predictable way to participate in the growth of America's largest companies through the most recognized stock market benchmark. So here's the best part is you're not locked into the TSP forever. However, you don't lose access to the S&P 500 if you want to go into, say, an IRA. After 59 and a half, you can use age-based in-service withdrawals to move money into an IRA while you're still employed. Or you can transfer your balance of the TSP when you retire to an IRA. The S&P 500 is the most widely used index for mutual funds and ETFs alike, with many options offering equal or even lower expense ratios than the C Fund, believe it or not. This means the investment foundation you're building in the C Fund can seamlessly continue into retirement with even more flexibility and benefits. Hope you found this insightful. Until next time, thanks.